Welcome to the deep dive. The crypto market right now, wow, it's just moving at warp speed, isn't it?
It really is. Every day feels like a new headline, a new development.
Exactly. And sometimes those developments, they make you kind of scratch your head and wonder, what's really going on behind the scenes. So our mission today really is to unpack this pretty fascinating collection of recent news, recent filings, stuff that reveals some serious corporate strategies.
And market sentiment, too. You can really feel the shifts.
Yeah, and the ever-evolving regulatory picture, of course. We want to look at how these companies are positioning themselves,
Right.
What's actually driving the market movements we're seeing.
And what the institutional world is signaling. That's a big piece of the puzzle right now.
Definitely.
And we'll try to go beyond just, the surface level headlines. We want to dig into the underlying implications of these moves.
Connect the dots for you.
Exactly. Connect these different pieces so you get a clearer, more comprehensive picture of what's happening in digital assets right now.
Okay, so kicking off with corporate strategy, let's look at Bakkt. They just made a really interesting financial maneuver.
The $1 billion shelf registration.
Yeah. Now, just quickly for anyone maybe not familiar, a shelf registration basically lets a company pre-register different kinds of securities with the SEC.
Things like stocks, bonds.
Right. And then they can sell them over time when the market conditions are right. It's kind of like putting financial tools on a shelf ready to grab.
That's a good way to put it.
But here's where it gets really interesting, I think. Bakkt's updated investment policy. It actually says they intend to potentially purchase Bitcoin and other digital assets with these funds.
And that is a powerful signal, isn't it? I mean, think about Bakkt's background. Founded 2018, subsidiary of ICE Intercontinental Exchange.
Who own the New York Stock Exchange.
Exactly. Heavy hitters. Yet, in that same filing, they explicitly mention a limited operating history, a history of operating losses.
And they even included that warning, the one about substantial doubt about our ability to continue as a going concern. That's serious stuff.
It absolutely is. So why would a company facing those kinds of, existential threats still be looking to put capital into Bitcoin?
That's the million-dollar question. Or I guess the billion-dollar question here.
It really speaks to their long-term vision, doesn't it? Even with all these short-term challenges, they see Bitcoin as potentially key. It shows a deep strategic commitment to digital assets.
Yeah, but their share price, it certainly reflects some of those immediate challenges.
Oh, for sure.
The NYSE listed stock, it only went up about 3% on the day they filed to $13.33. But it's still down, 46% year to date? That's huge.
I remember back in March, it dropped 30%.
Right, when Bank of America and Webull said they weren't renewing their agreements. Ouch.
So you got this really compelling contrast, right? Internal financial struggles, pretty serious ones.
But then this outward confidence, almost bullishness about the broader crypto market.
Exactly. They were on X commenting about the recent crypto IPO filings, Circle, eToro, Gemini.
Saying they bring validation, visibility, and maturity to the market.
It's like they're struggling at home, but they're still really confident about the neighborhood's future.
How do you square that circle, though? It feels contradictory.
Well, I think it points to this underlying belief, maybe conviction, in the long-term trajectory of the whole digital asset space.
So even if their specific business model has issues?
The asset class itself, they believe, has significant future value, enough to justify allocating capital even when things are tight financially.
Okay, let's pivot then. Speaking of major players making moves, Coinbase presents a really striking contrast to Bakkt right now, doesn't it?
Whoa, completely different story. Their stock is, as you said earlier, going vertical.
Yeah, it just hit a new all-time closing high, $369.21. It's up almost 40% just this month.
Surpassing its previous high from back in November 2021.
And just recently, it was the best performing stock in the S&P 500 for a day. Plus, it was the first crypto firm to actually join the S&P 500 back on May 19th. Big milestones.
And a lot of that rally seems tied to tangible progress on the regulatory front.
I mean the Genius Act.
Yeah, that moving forward in the House, plus the general prospect of clearer stablecoin regulation, that's seen as a direct win for Coinbase.
Because they co-created USDC with Circle, right?
Right.
And get half the revenue from it.
Precisely. So if you zoom out, it really highlights how much regulatory clarity, or even just the prospect of clarity, can impact a crypto firm's market value.
Yeah, and investor confidence, presumably.
Absolutely. Crucially, investor confidence.
But the analysts aren't all singing from the same hymn sheet on this rally, are they?
No, definitely divided opinions. You've got the bulls, like Raoul Pal from Real Vision saying it's going vertical now. The liquidity spigot is wide, wide open.
And Andy Hammond, the investment advisor,
Yeah.
even talking about potential 4-digit prices. Wow.
But then you have the skeptics, like crypto analyst Chad. He looked at the same chart, the Bollinger Band.
Which measures volatility. Right?
Yeah, a common technical indicator. And he interpreted it very differently. He suggested Coinbase might be ripe for a cool down soon, saying the price was overextended above the upper Bollinger Band.
So the same data, two totally different conclusions. Bullish hype versus technical warning signs.
It's a fantastic example of interpretation, isn't it? Really highlights the different perspectives shaping market expectations right now.
So in your view, is it bullish fundamentals versus maybe overbought technicals? Is that the tension?
That's certainly a key tension point we often see in markets moving this fast. The fundamentals, the regulatory tailwinds, they look strong for Coinbase.
But the charts are flashing yellow, maybe.
Yeah, the technicals are signaling, hey, maybe take a breather. The market will ultimately decide which narrative wins out in the short term.
It's fascinating. And just a little side note, I read that some early Coinbase investors, people who bought on day one back in April 2021,
Yeah.
they're apparently just now breaking even. Talk about holding on.
Wow, that's some serious long-term conviction. Or maybe, like you said, stubbornness.
Okay, so from boardrooms and stock charts, let's shift gears. Let's talk courtrooms and the wider regulatory landscape.
Sounds good. The Ripple versus SEC case is always ongoing, it seems.
Well, there's a new development. U.S. District Judge Annalisa Torres, she just denied a joint request from both Ripple and the SEC.
What were they asking for?
They wanted to reduce a $125 million civil penalty
Okay.
and, crucially, reverse her prior ruling that defined some XRP sales, the primary ones, to institutional investors as securities.
And she said no to both sides.
Yep, denied.
Interesting. And what was her reasoning? I mean, this ruling, it really reinforces how strict the courts are being about process in these complex cases, doesn't it?
Seems like it.
She essentially said there are no shortcuts around the proper appeals process, the one laid out by Congress, even for major players like Ripple and the SEC.
And did she comment on Ripple specifically?
She did. The court found Ripple showed a willingness to push the boundaries, suggesting there was a risk of future infractions.
So basically, you made your arguments, I ruled. Now you have to follow the official appeal route if you don't like it. You can't just petition me to change my mind.
That seems to be the essence of it, yeah. Stick to the established judicial process.
Okay. Now, moving from the courtroom back towards, well, maybe not boardrooms, but venture capital. Institutional investment seems to be continuing.
Definitely. Look at Galaxy Digital.
Right. They just closed a new venture fund. $175 million.
Which is significant because, one, it's their first fund using outside capital, not just their own money.
And two, it beat its target. Right. They were aiming for $150 million.
Exactly. And Mike Novogratz, the CEO, pointed out this was closed during one of the toughest periods for crypto fundraising.
So managing to raise more than targeted in this environment, that says something.
It absolutely does. And look at where they're focusing the investment. Stablecoins, tokenization, payments, supporting software layers.
All focused on real-world use cases, they said.
That's the key takeaway for me. Continued significant investment pouring into the foundational layers of the crypto ecosystem. It signals a clear, long-term belief in adoption and growth beyond just speculative trading.
Do you think this fund closing could be a sign, maybe a turning point for crypto fundraising more broadly? Or is Galaxy just, an outlier because they're so established?
It could be a leading indicator. Hard to say for sure, but when a big, respected player like Galaxy successfully brings in outside money in a tough climate...
It suggests the smart money is still interested.
Right. Interested in the fundamental building blocks of this digital economy, even if the wider market sentiment has been, well, a bit shaky. It's a vote of confidence in the underlying tech.
Okay, finally, let's unpack the buzz around Solana ETFs. This seems to be heating up fast.
It really is. Invesco just threw their hat in the ring. They're the 9th firm now to file for a spot Solana or SOL ETF.
And they're teaming up with Galaxy Digital on that one, actually. The Invesco Galaxy Solana ETF.
Yeah, so what this means, if approved, is that investors could buy into a fund that directly holds SOL. The fund aims to track its price.
Easier access for traditional investors, basically.
Exactly. And the filing also mentioned the fund might stake some of the SOL sometimes.
Okay. And the process for approval, it's the same as for the Bitcoin ETFs.
Pretty much. They need to submit a Form 19B-4 rule change proposal to the SEC. Get that approved.
And the bigger picture here is what? Just more diversification beyond Bitcoin and Ether?
That's a huge part of it. It shows a rapidly growing interest in broadening the crypto ETF offerings. It signals the market is maturing, recognizing the potential of other major assets like Solana.
And Invesco's number 9, you said? Who are the other 8?
Let's see, you've got CoinShares, VanEck, Bitwise, Grayscale, 21 Shares, Canary Capital, Franklin Templeton, and Fidelity Investments.
Wow, that's a heavyweight list. A lot of big names jumping in.
It really is, and the analysts are already putting odds on it. Some are predicting a 90% chance of approval for these Solana ETFs.
90%, that's high.
Very high. And some think approval could come as early as next month, well before the October 10th deadline.
So if these get approved, especially that quickly,
Hmm?
what could that mean for Solana itself? For adoption, for the price?
Well, it could be a game changer. Similar to what we saw or are seeing with the Bitcoin ETFs, it potentially accelerates adoption quite a bit.
How so?
It just opens up a new mainstream avenue for investment, makes it much easier for traditional investors, maybe institutions, who aren't comfortable buying SOL directly on a crypto exchange to get exposure.
So the market isn't just watching this. It's anticipating a whole new wave of capital could flow into Solana if these get the green light.
Precisely. It kind of de-risks the asset for a whole segment of the market, could significantly broaden its appeal, and likely impact its price.
Okay, so we've covered a lot of ground today in this deep dive. Quite a range.
We really have.
We look at these surprising corporate moves from established players like Bakkt, facing tough times but still looking at Bitcoin, and then Coinbase, whose stock is just soaring, partly thanks to regulation.
Then we shifted to that ongoing regulatory dance, like the Ripple case update.
Right, and the surge in institutional interest. Galaxy Digital's new fund closed against the odds, and this big race now for Solana ETFs.
Yeah, and if you take all these developments together, they paint this really compelling picture, I think.
How would you summarize it?
It's a digital asset market that's clearly maturing in some ways.
Mhm.
You see that with the institutional engagement, the focus on regulation.
But it's still got that classic crypto volatility, right?
Yeah.
And these big strategic pivots from companies.
Exactly. Maturing, but still very much an emerging dynamic industry with all the characteristics that come with that.
So lots of different signals flashing right now. We've got companies facing financial headwinds, but still betting on Bitcoin's future. We've got stock prices rocketing, seemingly tied to regulatory progress. And then this flood of institutional money and products like the potential Solana ETFs,
A real mix.
which leads to a final thought for you to mull over. Given all these diverse signals, what do you think will be the single most impactful factor shaping the crypto landscape over, say, the next year? Is it going to be these corporate strategies? Is it the regulatory clarity finally arriving? Or is it just the sheer weight of this growing institutional appetite?
That's a tough one.
Something to think about until our next deep dive.